right, we're going to start. Mic check, 1 2 1 2. Welcome, guys. Let's get started. Let's get started. If you're joining in live or watching this back later, you're welcome once again to the Tony Trades live stream. We usually have these streams every Friday. And today's session, fundamentals without losing your age. It's not about hype today. It's always never been about hype. We're not predicting anything here, right? It's about understanding what's happening in the market right now. Today's a Friday. And after every heavy set of fundamental news releases, it's important to understand how the environment is, right? And how do you respond to this kind of environment as well as tech are working out well. All right, we have 6 minutes until employment change and unemployment rate. If you've gone through some of my live streams, you've probably come across a similar live stream where we broke down Canadian numbers. However, we've had Bank of Canada decisions. We've had also correlations with oil data and federal funds rate. The Form C statement prior to this week. We had the press conference all within the same window. We broke that down. We broke down the data from the official website. That was from the Board of Governors of Federal Reserve System. Now, a lot is happening. As I speak currently, we are deep in the red with crypto. We understand why that is happening. All this is connected to the Epstein effect. Start this screen. Wonderful, yeah. So a lot is happening. Names are coming out. It's actually interesting to see how this is developing. If you've been following my community, my channel, I've been talking about this for months and years, right? Heavily involved in the blockchain space as well. And you can see how the system is changing, right? It's very clear at this point that we want to shift from the traditional financial system into a new one, right? The infrastructure, the regulations have all been in the pipeline. We have the Clarity Act as well coming through. We have a lot of sentiment changing, but it's not a fast-paced truck, right? Everything has to go through a certain structure. We have governments involved. We have a lot of negotiations happening across the globe, despite the geopolitical issues that we're having, and a lot more. Now, before we go any further, I'd like to put this out there. I use the promo code TSTREAM. You get 100% bonus on your first deposit. I use Pocket Options as the broker. Now we'll go into why. Brokerage companies, exchanges. This is something for another day. This is something actually very serious that if you're a professional trader, you need to know this. It's very important, not just to make money, but how to protect your money. Right? There are a lot of loopholes within the cycle, and we'll be moving through, going through this. Now, not to waste any time. We do have data coming out, and I want to draw your attention there. So this is exactly the environment where traders either level up or blow accounts. So this stream that I'm going to take, I'm going to try and explain everything in plain language. Of course, you cannot understand everything in a day, It takes time, so you need to show up. I want to try and show you how I read the environment, how I control bias, how I avoid overtrading. You probably know that I have 3 sessions. I try to get out 3 quality signals every day. So controlling bias is one thing, but making decisions across FX, indices, commodities, and crypto live on my stream. Now, if you're out there, type where you're from in the chat. We have an open Q&A. If your goal is to trade with discipline clarity today, you could just type discipline or wherever you're from, and come on, ask all the questions. You will have a good insight from me, right? My years of experience, I'll try as hard as possible to share. Now, without wasting any time, we are going to move to today's fundamentals in 2 minutes. Now, the reason why we're not scalping right now is because if you've been paying attention, we have a lot of considerations. We need confirmations before we get into any kind of trade. Now, employment change, how markets actually settle. It's very, very important to note that going into today's stream, we'll be looking at employment change. Amazing, amazing. Now, employment change. All right, we got 50 seconds, no worries, right? Let me just quickly break down for you the explanations. Employment change is just the measure of net number of jobs added or lost in the Canadian economy during the past month. Now, a higher than expected number just simply means more jobs are coming into the economy, and hence a stronger Canadian dollar. However, a lower than expected is equivalent to fewer jobs and economic weakness, right? And that simply means a weaker Canadian dollar. So it's considered one of the most important short-term indicators of economic strength for the Canadian dollar. Why? Well, because when more people are working, they spend more and more, and that simply boosts the economy and, of course, strengthens the currency. While, on the other hand, we have unemployment rate. Unemployment rate is the percentage of labor force that is unemployed. Now, they're pending. We just have to refresh our page. So unemployment is the opposite. A low unemployment rate simply means a tight labor market, which is in tandem bullish for the CAD, and a higher rate on the other side is the economic struggle indicator, which equals a bearish Canadian dollar. So think of it this way. If fewer people are unemployed, businesses are hiring, and that means the economy is healthy. As simple as that. However, in my streams, I like to break it down. So we have 6.5% for the unemployment rate, and we have minus 24.8 thousand for the employment change. Now, if we move over to gold, we have no reaction on gold, and that is obvious. We would like to look at Canadian pairs. So there you have it. We have quite a not very significant change right there. On the daily, we have pretty much a lot of gap to the downside, right? So we have our weekly open right there, and let's just put in one more line in here. Right there, we have a high. So we have all this space here, and some of you might claim that this is some kind of imbalance right there. On the weekly, okay, are you seeing me, guys? Oh, all right. Okay, please, if you don't see my screen, just simply remind me, because I have to keep restarting this. Great. I have to keep restarting this. Okay, so where are we now? Like I mentioned, now when these two are released together, like today, we usually have some kind of picture of the Canadian job market. And since the Forex market reacts instantly, we position our trades based on how the real number compares to the forecast. Now, what is the mindset going into such kind of trades? What is the mindset? Why news destroys traders, all right? Let's start with the real cause, in my opinion. It's usually not news. I'd say it's not news. Most traders don't lose on news days like these, right? Today's a Friday. You probably made some profit throughout the week if you follow my community. So I think that most traders actually lose because the numbers are very confusing. Really, they are very confusing. One would argue that the numbers came out positive unemployment, yet employment change came in and then the opposite happened on a lower time frame. You see that week? And you get stuck, right? So when the number hits, candles explode, just like we see this exploding. The spreads widen depending on the broker that you're using. Price moves very aggressively and your heart rate goes up. Your brain says, I have to be in this move. And what do? You just get a Canadian pair right there. You put your risk and you press the buy or sell. Now that is unacceptable. That feeling right there that you have is what most traders feel. However, it's the most expensive feeling in trading. Believe me or not, it's the most expensive trade feeling that you will ever have. Okay. Just checking out what's happening here. Right, so the chaos coming in, the adrenaline and everything that happens, trust me, I've been there. And there's nothing that separates a trader, a novice trader from an experienced trader in terms of feeling. The only thing is maybe how you control and how you react. So early on back in the days, news days felt like free money, and most of you have made some money willingly or unintentionally. Big candles, quick wins, until they weren't. Now, I lost more money on days where the days that were quiet, not because I was wrong, but because I was impatient. So it kind of reinforces that bad habit as you continue to evolve with your trading. So the mindset shift that changed was fundamentals don't mean you must trade. Simply, you don't really have to trade. Numbers are out. My mindset is you have to calm down, you have to understand. Fundamentals mean you must think more clearly, right? Why has this happened? What is happening on the performance radar, right? You want to go and check out what's actually happening with the performance. Let's see what is happening to the Canadian dollar. All right, you have to compare this before and after. Okay, we see that it's a little low. All right, now, since we know the correlation with oil, okay, you want to go check out what's happening with oil. You could get any chart out there. Oil or... And we talked about that a long time ago. Okay, let's see. 67. On the daily, we have a weep. So those are traps, and we'll talk about more on that. Now, this is one stage. Standing aside is not weakness. Standing aside is control. You want to be in control of your moves. It doesn't matter. The markets were here before you came and will always be there. You see, volatility and direction are two different things. They are two different things. Volatility and direction are two different things. Volatility in simple terms simply means price is moving very fast. It does not mean price knows where it's going. So after the news, any news, check out the 4 hour. Okay. We usually see things like whipsaws that you've witnessed already. You've seen a whipsaw. If you're new here, please ask questions. Whipsaws on the Canadian dollar. Where is that? There we have it. Check out the 15-minute. We got a whipsaw right there. However, on the upper side, we don't really have one. Maybe on the 30-minute or on the 3-minute. Yeah, then you also have false breakouts. So if we had, say, a level like this right here, and it was supported by a support area, right? So many of you could get trapped right there. These are basics, right? We have liquidity grabs. Maybe there's some orders down here that were tapped into. Then sometimes after all that, the real move happens. So in my mind, I simply want to break. I simply just break down trading into two phases. All right, we have phase one, which is reaction. Phase one is usually about reaction. It usually takes about 5 to 15 minutes, and the noise dies out, or the dust settles, and then you start putting in your trades. And then we have 30 minutes to an hour, which is phase two, which I like to call digestion. So my job isn't to catch phase one. My job is to survive it, just like we're doing now, and maybe trade in phase two. Now, I have a journal here that I use. And while I was studying my journal, I wanted to sort of reinforce the timing, because many are in different locations, right? Timing is very important. Now, I need to know if you people are listening. Anyone in the live chat? Well, we have a few people tuning in. We have Kelvin from Nigeria. The screen is a little blurry. All right, guys, thank you for that. You want to increase the quality. So you could go to your YouTube screen and increase the quality to 1440p HD. That will help solve the blurry issue. All right, guys, so I'm going to put out some gems today. So you want to understand timing. Every trader has heard of timing. You have to get into the New York session at this time, and that is right. It is actually right. However, you need to understand the reason why. So at 7 o'clock, at any retracement, we should be very keen on how big the retracement is at 7 o'clock US time. You want to tune your time to New York, all right? We'll talk about this separately, and we'll learn how to mark out the charts. You want to be very keen on how big the retracement is, evaluating your steps, and majority of the time taking at least 25% of your profit. Now, a very important part is equity market opens at 9:30. 9:30 is when the equity market opens. And having understood that, in New York it's 8:41, all right? So this is my thinking. This is how I'm dissecting all this and trying to position myself in a way that you're not caught off guard. So the first 30 minutes usually of the equity open is basically the building block of the daily range. We have a daily range depending on your instrument. I mentioned this many times. The templates vary from instrument to instrument. Maybe crypto is a little volatile, so basing on the fact that we don't have so much historical data, that is another topic for another day. Now, generally, you don't want to take any trades at 10 o'clock New York time. That is in the morning. You want to enter in between between 7 o'clock and 9 o'clock. Then you have to look at whether equities support your analysis or not. That is very important. You could rewatch this again to sort of digest what I'm saying right now, because you will understand that sometimes, for those of you who've been asking me about imbalances on a lower time frame isn't really filled, because we have the mother imbalance, just like we've seen in this chart that I drew here. There we have it. We had an imbalance on a lower time frame. It's pretty not visible. So there's a hierarchy. We have some kind of authority when it comes to breaking down what levels, what understandings actually supersede one another. Now, institutional trading, we usually never had candlesticks. We just simply rate the tip. We understood where the volume is coming in real time, right? There are some aggregators that can actually plug some of this information, and we also used live data coming in from the top liquidity firms out there. So there's a lot that plays in when you're reading fundamentals. So for starters, you need to just stop trading fundamentals. This is long term. If you're up here just making money and gambling, that's a different thing. Now, therefore, some imbalances stay open because on a higher time frame it is already rebalanced, and we've seen that. This is a little off topic today, but I felt like I had to mention this. If you enter in London, for example, make sure you remove at least 25% of your profit. It's very important. And by the end of London. So we have a little rules that we follow every day. We have different understandings of what times we enter, what times we should be done. Remember, there's a settlement at the end of the day. So today is Friday. We had some data come in, and some people just jumping into Canadian pairs without having any understanding, analysis, and this is just at the back of your mind, even before we start breaking down the data. Now, we understand that the Chicago Mercantile Exchange, 7 o'clock New York time is very important. That's when the bond market opens. It opens up at about 7:20 New York time. Now, we see that the effects of the interest rate markets as they come into play. So the range has to be between 7 and 9:30 max, depending. And this is not considering days like Form C and all the other interest rates. So we have a lot of manipulation, we have gains during this time, and we also have retracements. So you have to have positions from London, say longs, and we see a spike in this time, we must take profits. Now, all this that I'm mentioning is just one thing, all right? And you might want to have some notes on these. We have selection of setups as well. So we have a preparation, we have structure, and also risk. So even though the news is already out, just like right now, the news is already out. Any questions so far? So we have the news out. Today the prep process is the same every time. So let's break it down. We have Canadian pairs, right? I do three things. know the event, right? Not just the number. I check the calendar like I've done, the exact time, right? Expected value, previous value today, it's around 1:30. Okay, what time is it in New York? It's 8:47. Yeah, we have about 13 more minutes to go. Right. I also know that the market cares about employment change, which pairs. Sometimes it's unemployment rate, sometimes it's the wages. So the context matters a lot. So you need to mark your levels. This is the second step. After having marked all your levels, before the news, I mark previous day high and the low. So let's say we just take Canadian dollar, right? I mapped out the weekly low and the weekly high so far, and we see that we have daily. We move on to the daily, and we also have the daily. Daily is right there. We have the daily low and we have the daily high. All right, something like that. Now, ironically, if you've been here, you understand that we have exhaustions towards the end of the week, and because of that, price usually tends to react to these levels. All right, and naturally, just if you're aligning your technicals and you're a believer just in technicals, then you're more likely to see exhaustions and pullbacks. However, if the data is supportive, we might even have breakouts. Now, after news, price reacts to the levels. It doesn't really react to feelings. So after predefining that, you have to also understand your risk. Your risk is very important. All right, I like to keep it at 1%. 1%. Test it out, see what's happening, right? So I set some rules. Never risk more than 1% per trade for the long term. On pocket options particularly, that means smaller position sizes and no expectations. So you could break this down into 4 or 5. I have a martingale strategy for that. It's free. Go check out my community. You could put in the data there and it will calculate how many steps, all right? I've talked about this multiple times. If you have questions, please feel free to ask. So rules that I set in advance are like no trades in the first 5 minutes. I've explained why. Minimum 15 minutes. Wait if there's some kind of deviation. Wait a little longer. So I have my set of rules here. You can print them out if that satisfies you and actually helps you think clearly. So if I have no setup, then I have no trade. My trades, my signals come usually after 9 a.m. because I have quick ins and outs. So that's why if you check out my Telegram, I put the instructions, the confirmations, and the execution style, right? So increasing size is very important. Notice how the pocket options has a nice calendar here. You don't need to buy anything. It places everything. It simplifies everything. So let's look at what actually comes out. We have employment change coming out. Employment change came out at minus 24.8, right? Versus unemployment. Employment came out at 6.5. Now on paper, you could say that is strong. When we look at price, what is happening? Nothing much is happening. If you look through the correlative analysis on most Canadian pairs, for example, we have Australian Canadian dollar, and if we check the 1 hour, same thing. It's a Friday. We don't have much volatility happening. So you need to do more correlations there. So we can zoom in into smaller time frames and have an idea what the wicks are? Do we have any wicks on the lower time frames? No wicks on the Australian dollar. See any weeks there? Not so many weeks. So traps are very common on days like this. So we have some breakout going there on the Canadian dollar. Canadian dollar. USD Canadian dollar. USD Canadian dollar, and we have, okay, I have to keep refreshing this. Yep, we have some correlations there. All right, so there's a trap. If you trade the first candle, you're trading other people's panic, not your age. So instead, I'm asking, right, did price respect the level? You can compare, right? This is going down, this is going up. Weird, right? You could arbitrage that as well. So, did momentum fade? Is there any form of momentum? We're getting into 15 minutes. Actually, it's more, 20. Are the candles becoming cleaner or they're messy? Right now, I'm flat, right? I have nothing much to do, and that's a win. So you have to pause and let the chart react. And the logic will come later on, the execution logic. When you're talking about execution, you have to understand that if a setup appears, right, you only should take news trades if structure returns, right? If we have a spike and price comes up, then there's a high chance that could be filled. Okay, that could be filled. Look for breaks and retests. And you need to consider not more than 5-minute expirations. I have different expirations that I use, but considering volatility and fundamentals, you want to keep it at 3 and 5, depending on your style. Ranges after news is also interesting. Sometimes price doesn't do anything. It does nothing for the first couple of minutes. Right? Price doesn't do anything for the first couple of minutes. Right? Is it in a range? It's not boring. That's information as well. That's telling you to wait. You just have to wait. Simply wait. Right? At range extremes, if it's been consolidating the entire week, right? It's been consolidating the entire week. Then look for the extremes, right? Is it trying to break off? I may take small turbo trades, I call them. So if you have 1%, you could use, let's say, 0.05%. You know, just a turbo trade, just to test the waters. How's it going? Right? And you could use a shorter expiration, like, let's say, the let's see something. Yeah, the 15-second. Try that. Test it out. What's happening? Is it coming down? Is it moving up? You have nothing to lose, right? Check it out. Understand what's happening. You know, there we have $53. Test it. Does it react? Is it very impulsive, right? Are your orders being filled, and does it rush away from your entry? This is all information, and this information helps you understand. So you see, we entered, we made a profit, and price raced away. So it's giving you not just intuitive understanding, but an informed pulse. Like, you are testing, you're looking at your indicators and saying, are you at the extremes, are you not? So at range extremes with confirmations, I may take those types of trades. Right, if nothing sets up in, say, 20 to 30 minutes, you just log off. So we're just getting started because we have 8:57. We haven't yet tapped into the New York time. So good question. Let us look if you have any questions in the chart. I want to check out the chart now. No questions, right? Please feel free to ask questions. Now, there's a understanding what kind of setups I take. Now, they are my kind of focal point is understanding the efficiency in trading. It usually comes by way of process oriented thinking. All right, what do I mean by that? Most of you have ideas, but you need to structure your trades. You have a nice strategy, you have the confirmations, you understand what to do, but you need to write these rules down in your journal. For example, you have a step like patience, and you could repeat that side by side. Patience. How much time do I have to wait? Is it 5 minutes? Is it 25 minutes? And why? All right, you have the reason. And then you have to define the trade environments. Are you at the start of the month? Are you at the start of the quarter? Are you midway? Are you at the end of the month? Which fundamental news came before, and so forth? There's that kind of thinking. You are sort of structuring your thought processes, and you are also calmly getting into the mechanics, and it's pretty much like lubricating your old car, right? And you have to do that consistently. So you need to determine your parameters. Parameters, I have so many videos on that. And again, the timing differs, right? What you do on one instrument will definitely change, because don't forget, the people at the back of these algos also use these mathematical parameters as well to build these same algorithms that actually move. I have a trading board you might want to check out. It's also very interesting for those of you that are extremely tired, bored, and just don't have time for this. You have a 9 to 5, you just plug in there, and there you have it. Profit as well. Now, executable criteria. What is your execution style like, and what do you have to follow? And understanding why it should pan out. Have an idea. When you have a trading idea, you can actually map it out. There are nice tools for that. Map that out properly. Put your ranges. Now, this is just thinking. Remember, we have talked a lot about all the other criteria and all the mumbo jumbo that we've been sharing. This is all a process. As you start, as you continue, it will start to make sense. The chart that we see is probably different. Some see candles, others see stories, others see institutional games, some see brokers and what the exchanges are doing, what the liquidity providers are doing, where does this end? So there are a lot of steps. So experience for future reference. Have that experience. Don't just take trades and call it a day. Take a trade, understand, journal that, and move on. So you have a bigger picture perspective, you have an intermediate perspective, and then a short-term perspective. And of course, now coming down, all right, we will have to go into the trade. All right, we had one, but that was a test. So what I'm going to do, I'm going to move into my community now, since it's almost around the time to set up the. All right, it's 9 o'clock. Any questions, guys, so far? Any questions? Now, before we wrap up, right, we have the New York session and some signals coming in. If you remember nothing else from today, remember this. I want you to remember this one thing. The market will always move. You don't always need to, right? Fundamentals create a lot of noise first, and then clarity later. Risk management keeps you in the game. Patience is not passive. It's a professional skill that you develop, right? Okay, I'm moving in now to the signals. All right, now we've had 4 winning trades in the previous one. We had a win rate of 100%, and we looked at the Australian dollar CAD, Australian USD, GBP, Australian dollar, and Swiss franc JPY. All right. mm-hmm. Okay, we could break down the interest rates, but I want to check out what's happening with the data. All right, move on to the unemployment rate. Let's see what's happening with unemployment rate. Yeah, you could go through this. We had a monthly change of 0.3 points monthly, 6.5. Now, what is Forex Factory telling us? 6.5%. Which is positive, right? The forecast was 6.8. We had 6.8. Let us break that down, right? So they're saying the unemployment rate fell by 0.3% points to 6.5% as fewer people searched for work. So if fewer people are searching for work, in January, employment fell by 27,000 among co-aged women between 25 and 54. There was little employment change. Oh yeah, I'll just restart that. Yeah, I'm reading the highlights, right? Among co-aged women, there was little employment change among the other major demographics groups. Few people were employed in manufacturing, educational services, and public administration. At the same time, employment increased in information, culture, and recreation, 2%, business building and supportive services, agriculture, and utilities. Now, that is employment in January. While unemployment fell, while employment decreased in Ontario. In Ontario, while across Alberta, Saskatchewan, we want to concentrate on the capitals. Now, if you're deep into academia and economics and you understand the micro level, I'm a big believer in microeconomics changing, having a very big impact. You will understand regional development and why some of these parameters are either barriers or stimulate the economy. So having an understanding or a picture of Canada as a country, what happens in these different regions and how it affects the economy long term is very important. So having this background information for January, now we are in February. We'll see that later on. Employment ages down in January. Employment ages down, unemployment rate falls to 6.5 as fewer people search for work. Right? And we have charts here. You could go, if you're into, econometrics, you could use Stata, you could make your own models, you could go to Excel, have that spreadsheet out there, and that is how you act. This is how the institutional research break down these numbers, right? And they follow them. We have specialists for every currency, and I'm just sharing what actually happens behind the scenes of super smart elite hedge funds. They have tapped into universities, research departments. They have their insiders everywhere, so they're getting all this information. Now, this is just Forex. We have different baskets. Crypto is another hell, and it gets worse and worse. Now, understanding all this data and being able to quickly, the reason I say scalping during these times is extremely uncalled for. It's not really important, jumping onto fundamentals. things have changed in our era, and if you're not using expirations, it gets really hard unless you have good information and you can stay patient and you know how to cherry pick some of these beautiful setups that we can see. A lot more I talk in my group. Go check it out. I'm about to send some signals. I already see some signals here, high quality signals. We've made, how much was that? 60 backs for the sake of just showing how to test the waters and share my insights. Please feel free to ask questions, DM me. I'd love to answer some of them. Now, if this session helped you, please hit the like button. Share it with someone who overtrades news, right? And join the free group if you want more structured lessons like this. It was a great session and hope to see you next time. Thank you guys and see you later.